Well, we've had some pretty bullish sentiment come through from a few traders and analysts over on that end regarding the market's performance and where we're headed for the rest of the year. Some saying that the NSE is expected to rise between 25 and 30%. Are you as optimistic? Because that means we still have about, two-thirds of gains to play for here.
I think on overall, we're seeing very good news coming into the economy. And so on overall, the sentiment are probably valid. We're seeing, especially from the mineral sector, that news over the last 2 weeks is starting to have investors start to look at the country as a mineral producer. And it's not just oil. I mean, we have gold, there's coal, and a lot of other resources as well, including rare earth and titanium. So investors are starting to relook the country and starting to consider which stocks might actually benefit over the longer term as this development actually come through.
We'll be getting a stock specific in just a bit, but that 3,400 point mark, Eric, is proving to be a very interesting one, and it's hard to see any sustainable gains maintained above that point right now. What do you make of psychological levels within this current environment that you've just outlined?
If you look at the inflation numbers which came in through last week, we saw that declining. The Monetary Policy Committee held its central bank rate unchanged, but they made important changes with regards to the interbank rate. Just looking through over the next coming months, our estimates were looking 15 to 20% increase for 2012 in terms of the index. And we think that's sustainable given where we are at the moment.
Okay, so let's drill down into some of the opportunity that you're identifying, especially on counters that are looking set to leverage off these economic growth prospects that you've just highlighted.
We think to a certain extent the consumer stocks are going to be quite important. If you assess the middle income in terms of like if you compare Kenya with the rest of the countries, we're looking at a middle class of around maybe 44% of the population. And that's growing, and we expect disposable income to keep on growing, especially with the ongoing economic growth. So essentially, if you're looking at that, you're looking at companies, the manufacturing sector. So East African breweries is something investors have been looking at. Uchumi, a supermarket chain, and a number of other companies which are really dealing with the retail sector. We also think distribution companies will play an important role. So be it in the oil sector, be it transport and logistics, distribution companies. So Transcentury, for example, we think from an infrastructure development point of view, it's going to be an important counter.
To what extent does that translate over to the banking sector as well, Eric? I mean, looking at volumes on Thursday, volumes were unsurprisingly dominated by Equity Bank, that counter going ex-dividend. But on a fundamental basis, what's your view on a company like that, or even KCB? I mean, that was a counter that set a fresh 9-month closing high of 23 shillings 25 by the close of Thursday's session.
Actually, yes. I didn't actually mention the banking sector. The banking sector actually comes almost ahead of all the other sectors, and we've seen that trend, especially the indigenous banks. So KCB and Equity Bank has seen a lot of interest, along with the other smaller banks such as Diamond Trust and NIC Bank. So we expect those banks to actually come in almost ahead of as these developments come through, because you have to lend to these sectors, and then you have more transactions coming through. So overall, we are quite bullish on the sector, on the banking sector in general as well.
What's your view on private sector credit growth from here on out? Because at the MPC meeting that was held last week, we had the central bank pretty cautious about the loan growth environment moving forward, and also about just how fast private sector credit growth is going to expand in the current high inflationary environment.
Yes, I think it remains uncomfortably high for the Monetary Policy Committee. If you look at the January figures, credit growth year on year was about 27%. It declined slightly in February to about 25%. We think the target for the Monetary Policy Committee is about maybe something less than 20%, so maybe around 18%. So we still have quite a long way to go in terms of reducing credit growth. And I think that's, once that comes under control, then that's when we'll start having controlling inflation sort of coming into place. So I think to a certain extent, we're going to see a bit of pressure on the banking sector in terms of credit growth in the short term as the Monetary Policy Committee sort of tries to rein in on inflation. But beyond that, I think we're going to start seeing relatively good growth.
Well, Eric, if we extrapolate from a focus on the consumer over in Kenya, a slightly further, Scangroup is a company that possibly comes into the spotlight here. It's another counter to have set a fresh 9-month closing high on a Thursday session, and it's posted, a 25% return year to date so far. So I'm seeing a further rally of double that, that we've seen year to date. What's your view on a company like Scangroup and prospects from here on out?
Yes, they're just about to announce their full year results in the coming week. So we're seeing a lot of position taking on the stock. It's very tightly held. We think WPP eventually would want to have a controlling stake in the company. But in the short term, we're seeing quite a bit of bullish sentiment. I mean, it's probably the only listed marketing services group that has a focus on Africa. And the Ogilvy acquisition last year gives it a very good positioning, especially as it expands across the continent. So we are seeing investors looking at it despite its pricing. It's quite expensive compared to the market, but we're seeing a lot of positioning on that based on the expected future growth on the company.
Of course, a lot of that growth to be leveraged off this partnership with WWP and the kind of relations a company like WWP has with international companies looking to do business on the continent itself, right?
Yeah, certainly. I mean, this is something that we expect to continue. The WPP partnership is very important to Scangroup. If you look at the agencies that they've actually formed, within Kenya and within East Africa, they've maintained a very strong leadership in many of the key areas, so especially telecommunications and banking. And we expect that movement to be replicated into West Africa as well as Southern Africa.